Hello, in this video we're going to cover taxes. So we're going to be talking about, and primarily income tax is going to be our focus, although there is some sales tax and there's some other taxes. Primarily we're going to be talking about income taxes. Okay, so let's get started. So in this chapter, we're going to talk about what a tax is, how our projects around the city and around the federal government are funded via taxes. We're going to learn about what the progressive tax system is. We're going to learn about a little thing called capital gains. Now, capital gains is amazing because you pay a lot less in taxes. But you have to earn income a certain way rather than a traditional going to a job, getting a W-2 type thing. And then finally, we're going to talk about a couple different things that you can do that can reduce your taxable income, save you some money. All right, so let's get started. This is our vocab word today, and taxes are really... This is what we're paying for membership in this society, right? I mean, to get our roads paved and taken care of, for our parks, for the police force, for the fire, all of those types of things are our taxes. Okay, so let me ask you this question. If you were to make $5,000 a month, what is the appropriate amount that we should pay in taxes? I want you to think about that just a little bit. You kind of just think those through, and I'm going to share with you what our actual tax amount is. So let's talk about that, okay? But just think, $5,000 a month, what would be the appropriate amount you think someone should pay in taxes? All right, let's look at what it is. Okay, so here, $800 alone in just your federal income tax, and you have some state taxes, you've got property taxes, sales tax, payroll, I mean, you got a lot of taxes there. That's about a little over $1,700, $1,750 basically, in taxes off of $5,000 in income. That is a lot of money going to our taxes. Okay, let's talk just a second for what, the average person pays. I mean, the average person pays roughly a third of their income is going to taxes. That is a lot of money, okay? But that's kind of just the average American. The rich, if you will, the rich pay a lot more than 1/3. They pay the highest amount in taxes. And the poor, those who don't make a lot of money, many of them do not pay any sort of federal income tax. There are some other taxes. They pay sales tax on goods that they purchase, property tax in the place that they're living. If they don't own a home, they're paying it in their rent, essentially, okay? Next vocabulary word, this is the IRS. This is the government agency that is tasked with enforcing whatever the tax guidelines and policies are. Okay. All right. What are some items that are funded via taxes? Think about that for a little bit, okay? What are some government agencies or government programs that are funded with taxes, whether that, we've kind of talked just a little bit about police and fire, military, all of that. And some other things maybe that you didn't think of right away that are also funded by taxes. I mean, the national debt, that's like a third of our budget that we have is paying interest. Isn't that crazy? It's amazing if we didn't have that national debt, how much more we could accomplish, or how much lower our taxable amount would be, giving more money to our citizens or our taxpayers that they can use how they see fit. But right now we have that national debt, and it's huge. Social Security, healthcare programs, politicians, right? I mean, they have a salary, they earn an income. So our taxes go to pay for them, right? All right. In our system here in America, we have something called a progressive tax system, meaning that the more income that you make, the higher the percentage that you're going to pay, and the more total dollars that you're going to pay, okay? If you are wealthy, the society that we live in has deemed it necessary for you to pay more money than someone who has less wealth. Now, right or wrong, wherever you sit on that, that's where we're at, okay? I do think that we're overtaxed. I think that we need to cut down the amount that we're taxed, especially our wealthy. We need to cut their tax so they can pump more money into the economy. They're going to have a bigger impact, okay? And a wealthy person... And we'll go through this. We'll go through this in just a little bit, and we'll kind of talk about that. But anyway, it's a progressive tax system. Here are the tax schedule, okay? Here's how much you make, and here's how much you're going to pay in taxes. All right. And this gets to be quite a bit here, okay? A lot of information all at once. Here's what I want you to focus on. I want you to focus on this single, right? Hopefully, as you're watching this, none of you in my class are married yet. So you're single. So here's your tax structure. If you make between $1 and $9,875, you're going to pay 10% in taxes. You make $5,000, you're going to pay 10%. That's $500 in taxes. Okay, sort of. We'll get to some deductions a little bit later, but so that's your tax code. Okay, if let's say you make $10,000, your first $9,875 that you make will be taxed at 10%. The other $125 that you make, right, the difference between $9,875 and $10,000, that $125 is going to be taxed at 12%. Not the entire thing. So your entire income is not taxed at 12%. Just the amount that exceeds $9,875. And this gets really confusing. I would say probably the average American, probably 80% of the average Americans, or 80% of Americans don't understand this aspect. And some people will go, well, you know, my work offered me a raise, but that's going to put me into a higher tax bracket. So I told them no. No, that's not what happens. Only the amount that exceeds the previous limit is taxed at a higher rate. Everyone in the United States, the first $9,875 they make is taxed at 10%. Okay, Jeff Bezos, his first $9,875 is taxed at 10%, just like you and me. It's no different. Then the next, between $9,876 all the way up to $40,000 basically, is taxed at 12% for everyone across the board. So if you're a millionaire, you're still paying a 10% tax on the first basically $9,875, and then you're going to pay 12% tax on the difference between $9,876 and $40,000 basically. And so it's just, it progressively gets higher. So we're talking about our millionaires. Our millionaires are down here making paying 37% in taxes. They are paying a lot more in taxes than what the average person is paying by far. I mean, an individual who makes less than $10,000, let's say they make $9,000, is paying 10% in taxes. Someone who's a millionaire is paying basically 4 times that amount, 37%, 3.7 times that amount. 37% in taxes. That is a lot more than someone who's making only $9,000. And you may be saying, well, yeah, sure, they can afford it. Okay, why? Why do they have to pay more? Just because they can? So you want to just kind of be thinking about that as you go to vote, and you can determine who you're going to vote for, at least on tax policy. I mean, it's crazy to think that we're charging one individual almost 4 times what we're charging another individual. Oh, and that's just the percentage. The dollar amounts get really crazy, right? The vast majority of our taxes are paid by the wealthy. I'm never a proponent of taxing anyone any additional amount. If anything, I think we need to reduce the taxes across the board, but especially on the wealthy. So anyway, that's my personal opinion. Okay, let's look at a scenario here, okay? I've got 2 individuals, and I'm still going to be using this tax schedule. So I've got 2 individuals here. Jarius makes $50,000 a year, and Nathan makes $100,000 a year. And I'm just going to go through, and I'm going to detail how much they're going to pay. And I'm still going to use this. So the first $9,875 that both of them make is going to be taxed at 10%. All right, so Jarius makes $50,000. So that first tax bracket is taxed at 10%, right? $987.50. With the IRS, they do round them to the nearest dollar, so that's why I have $988. Okay, so the first amount there is taxed at 10%. And then between $9,876 and $40,125, that portion is taxed at 12%. Only that portion, okay? So notice it's not 12% of the total, just that portion. And then between $40,126 all the way up to $50,000, that amount, only that amount is taxed at 22%. So you'll notice here, it's actually broken down into 3 different categories that Jarius has to pay. Now, his total taxable amount, in order to get that, we have to add all 3 of these. So I'm going to add up all 3 of these, his total taxable amount for the year. Now, this is just federal income, not state, not anything else, just federal income tax is $6,790. Okay, well, Nathan makes $100,000. And again, first of all, why should Nathan pay more than Jarius? If Jarius is paying $6,790, why would Nathan pay $7,000? It seems weird to me, you know. But let's go through this scenario. So the first $9,875 that he makes is taxed at 10%. Okay, everybody across the board has done the same. Then the next portion, you notice these here are exactly the same. They have not changed at all, not one bit. Okay, But here's where it's going to start to change, because Jerry has stopped at 50,000 and Nathan is going to be making up to 100,000. So we need to continue to go. So the 22% tax bracket goes all the way up to 85,525. And then finally, he's in the 24% tax bracket, anything between basically 80,000 and 100,000. Now to get Nathan's, we must add up all of Nathan's. Okay, so as we add up all of these together, Nathan, and some of you may be saying, well, he should pay twice as much because he makes twice as much. To me, that's ridiculous. But even if you say that, well, look at Nathan. He paid almost 3 times as much. He's paying a really hefty tax bill in comparison to Jarius. And the reason is because he's ended up paying this extra $50,000 that he made is taxed at a much higher rate than what Jarius's initial $50,000 was. So yes, he's paying a lot more, and that's the way our structure is set up. The more money you make, the more money you're going to pay in taxes. Just for clarification, this is based on the 2020 tax code. If we went back to what the tax code was under Obama, it would have been, Nathan would have paid $21,000 in taxes. During Trump, he cut the taxes, and so the amount that Nathan has to pay in taxes is going to be less. Same thing with Jarius. His would be less. His would be a different amount because he makes a different amount. So, all right. So just crazy to me, but that's essentially how our system works. It's called a progressive tax system. As you progress up, you pay more interest or more of a percentage of your income. All right. Now, we've kind of brushed on that, just very, very basic. Okay, single, and we could go back and look at that big, long spreadsheet that has it all in there. Single is basically you're single, right? You're not married. Or you're separated. There are some instances you can do that. Married filing joint. This is an individual like my wife and I. We are married. We file a joint tax return. We combine our 2 incomes. We combine our 2 deductions. We make that all in one tax form. So the 2 of us file one tax form. Married filing separate, that means we file separate, right? Most of that, there used to be what they call a marriage penalty tax. If you're married, they actually charge you a higher tax rate. They have done away with most of that. It still exists at the very, very high tax levels. So if you have 2 individuals who are married and each one of them are making $1 million a year each, it's actually better for them to file separately rather than a joint tax return. But typically, if you're making less than that, a joint tax return is equal to a single, filing singly. So anyway, head of household, this basically means you're on your own. You're no longer with mom and dad. They're no longer paying for you, or maybe it was just mom, or maybe just dad, whatever your case may be. But now you're on your own, so you're considered head of household. And a widower, that's of course if your spouse recently passed away and you still have a child at home. Okay. How taxes are collected. So what happens here, and I'm going to talk about this toward the end of this video. I'm going to pull up a pay stub. And the federal government has said, well, if we just send people a bill on what they owe on taxes at the end of each year, that's a pretty substantial amount. And they might get pretty angry with us. And they understand psychology, the federal government does. So they say, okay, instead of charging them once at the end of the year, why don't we do this? Why don't we just have them make payments throughout the year? So that's what we do. We have what we call a pay-as-you-go system. Basically, you get your paycheck, and taxes are automatically taken out in your paycheck every single time you get paid. And so this way, it doesn't feel like such a big burden on you. But look at it as you file your taxes at the end of the year. It is absolutely crazy how much money you're paying in taxes. And then you can decide whether you believe that's an appropriate amount. For those of you who disagree with me and think that you should pay more money in taxes, I totally encourage you to pay more money in taxes. That's fine. Go ahead. You can do that. I just don't want you to take it from me or from someone who doesn't want to pay it for a federal program that is ineffective, right? We should have some say in that. Anyway, so they take it out of your paycheck every single time you get paid, including federal, state. They do Social Security. They do Medicare. We call that FICA. We're going to talk about that as we go through our pay stub at the end as well. Okay.